Hi, everybody. I'm here again with Sue Baker-Dirickson. We recently talked about new loan programs for 2023. And one thing we still need to cover are first-time buyer programs. These programs were not that relevant in our area because of the high cost of real estate here, and also because of higher income levels. So now with the expansion of is it FHA limits?
These are conventional and FHA limits were expanded at the end of last year.
Right. So because of this expansion, this program became more relevant. I'm here again with Sue. Please, Sue, introduce us to these programs and tell us what are the benefits, what's so special, and uh,
Okay.
who can use it?
Okay, great. So these programs are specifically designated to first-time homebuyers. And a first-time homebuyer is defined by Fannie Mae and Freddie Mac as someone that has not owned a primary residence during the past 3 tax years.
Including or excluding investment?
If you currently own investment property but have not owned a primary residence for the past 3 years, you're a first-time home buyer for this program.
Got it.
Okay.
So,
So it's Fannie Mae and Freddie Mac have come out. There's 2 levels of loan amounts. So we have the standard conforming loan level, which in the Bay Area, in our high cost county, the standard, which is standard throughout the country, is the 726,200. And then
okay,
we have the expanded conforming loan limit, which takes us up to a loan amount of $1,089,200. So on these first-time homebuyer programs, we can do as little as 3% down on this basic standard conforming loan amount. When we get above that, we do need 5% down. The benefits of these programs is that Fannie and Freddie are eliminating what's called LLPA. LLPA stands for Loan Level Price Adjustments. And they're adjustments that are made for everything that's considered to add any sort of risk to a loan. So it can be something like a lower down payment is more risky. It could be something like a lower credit score, condominiums. All those things are add-ons typically to the interest rate, which drive the rates up in these scenarios.
got
For
it.
someone that, as a first-time home buyer, has income under 199,992 per year, they eliminate all of those price adjustments. So the benefit, depending on credit score and down payment and property type, is somewhere typically between 0.5% and 1% in rate.
Oh, wow.
So it makes it much easier. And the other thing on these programs is we only need to declare as income to qualify for this program the income that is needed to qualify. So what does that mean?
Hmm.
Let's just say you're someone that has a salary and you have a
Right,
bonus, okay?
right.
And the salary is under the limit. But if we had to add the bonus, it would put you over the income limit. If I don't need that income on the bonus to qualify you for the loan, you qualify for the program. We just don't use it.
How
Same
about
thing if
stock
it's
options?
a couple. If we've got 2 incomes, but we only need 1 to qualify, that's all we have to use.
Got it.
So that's different than some programs that are out there, like Cal HFA has programs. They have higher income limits in most cases. However, they always add all of the income. So anybody that lives in the house and any kind of miscellaneous income, even if there's not a history of the miscellaneous income, it can just qualify a lot of people. Where these new programs with Fannie and Freddie don't have that
So,
requirement. So it's making it open to more people.
so they're federal programs. These are
The
federal.
Cal HFA is a federal program. The conventional is not. Fannie and Freddie are conventional, so they do not have those same restrictions. We just need to use the income that we have to use to qualify you. We
Got
can't
it.
use less than what your actual salary is. So let's just say you made 200,000 and we only needed, 190. We have to use the 200,000, but we don't
Right.
have to add in the miscellaneous portions of your
What
income.
about 2 jobs?
Same thing. We only have to use what is needed to qualify.
Okay, got it. And the same thing with the stock options or any other type of
That's right.
compensation.
That's right.
Just from my understanding, so this program is nationwide, right? The
It
limits
is
are local,
nationwide. The loan limits vary per county.
right? So depending on the kind of cost of real estate.
Well, and the median income for the area.
Oh, okay. And in terms of who are the lenders in this situation?
Any lender that offers Fannie and Freddie programs can participate in this program. However, on the last survey, there's only about 10% of the lenders in the country that are making these programs available. So
Okay.
even though all lenders could offer them, aren't all choosing to offer them.
But guaranteed rate can't do that, right?
Guaranteed Rate Affinity is participating in those programs. Absolutely. In
Got it.
fact, we are really marketing the program. We feel there's a real need for it. So we're really doing our best to get the word out.
Yeah, and I appreciate that because, as I mentioned before, I never thought that these first-time homebuyer programs are relevant in our area, at least based on my previous experience. And finally, they're here. You mentioned that there is a benefit specifically for condominiums.
Right.
Why is that? Can you elaborate a little more about that?
So with Fannie and Freddie, anytime you're buying a condominium, if you don't make at least a 25% down payment, there is a loan level price adjustment added to the rate. And the amount of the add-on varies by how much the down payment is. So the lesser the down payment, the more they were adding on. So this program, if someone can work with the income and the loan amount, they're wiped out. They're going to get the same rate as someone that put 25% down.
So what I hear that the people who benefit the most will be people with good income, but really low down payment.
And surprisingly enough, lower credit scores.
So how low a credit score would the program accept? How low can you go?
Okay, how low can you go? You can go as low as 620.
Got it. And after that, people are just not qualified, or there are penalties?
No, they're not. The program they don't meet the program guidelines.
So you basically cannot participate. Yeah,
right.
that covers a lot of young people who start in our area. They're getting good income, but they didn't have time to accumulate the down payment. So it sounds like
or their credit is still new. They don't have, but you're going to get if you have a 620, your interest rate is going to be the same as somebody that had 750.
As of today, what will be the range of interest rates in programs like that?
So most of these programs right now, if you're talking about a condo, and let's just say average down payment and that type of thing, you're probably looking at around 5.75 to 5.875 on a 0-point loan.
Got it. Because if you read the news, they typically quote and show you higher interest rates than what you just mentioned.
Right. Well, if you were buying a condominium, let's just say with 5% down and your income exceeded the limits here, you'd be looking at a rate of probably about 6.5. So you can see it's a significant benefit.
Yes, definitely. And are there any limits on owner occupancy of those condominiums? What's the percentage of owner occupied units should be in that development in order to qualify for the program?
On a primary residence, that's not a concern.
Not a concern. Got it.
That's only a concern on investment properties.
With some conventional loans that we were involved with, the lender would be looking at the owner occupancy.
Well, because those are things a lender can always have their own guidelines, which are more strict than Fannie or Freddie, just not less. And so we do run up against that sometimes from time to time. Different financial institutions do have those limits, but standard Fannie Freddie guidelines, if you're going just by their guidelines, if it's primary residence, we don't have to be worried about that.
Got it. That's definitely a huge benefit. How long does it take to qualify for the program, and how long does it take to close a loan like that?
Okay, so it doesn't take any longer than doing any standard conventional loan. So I would say our comfort level is 30 days. Do we do them faster, 21, 25 days? Sure. But it's very easy to do them in a 30-day close.
Got it. And in order to get pre-qualified, what's the lead time before you get a pre-approval letter?
It's very quick. If someone can go onto my website and complete the application, we'll send out a request asking them to upload a few documents, things like paycheck stubs, W-2 forms, and bank statements. And in 24 hours, we can issue a pre-approval letter.
Got it. Well, I'll put a link in the description below, and I also will put contact information for Sue. If you guys are interested in exploring these programs further, you will be able to get in touch with Sue. Well, thank you. I really appreciate your time. And it
Thank
seems
you,
like
Michael. It was nice to talk with you again.
this program sounds pretty straightforward. So I hope there is enough information for people to get interested and get in touch with you.
They need more information, just let us know.
Thank you.
Thank you. Bye-bye.